Hello and welcome to Crosstalk. I'm Peter LaBelle. Rising and surpassing. This is one way to describe China's truly amazing ascent on the international stage. But with success comes challenges. Is the U.S. ready to be second best to China? And as China becomes number one, will it demand a change of the rules that have benefited the West for decades, even centuries? To Crosstalk, China is number one. I'm joined by Ilan Alon in Orlando. He is director of the China Center at Rollins College and author of Chinese International Investments. In Hong Kong, we go to Martin Hennah. He is an associate director at the Tyke Group. And in Chicago, we have Joshua Litman. He's an associate with the Boston Consulting Group and has done prior research on the Chinese currency. All right, gentlemen, this is Crosstalk. That means you can jump in anytime you want. Martin, if I can go to you in Hong Kong first. The International Monetary Fund says that China will equal the U.S. economy in 2016, but others are even saying that the Chinese economy has already surpassed the American one. How do you look at it?
Well, yes, as you're saying, the most optimistic viewpoints there are that the Chinese economy may already be 20% larger than the United States one. So we aren't entirely sure where it is, but certainly from our point of view, the perspective or the viewpoint from the United States and Europe is generally that still China is lagging far behind, and we think that's clearly not true. And apart from the IMF, we even had a study by the Economist released just now saying, also like the IMF, that China will be surpassing the US as the number one economy in 2016 in the purchasing power parity terms, and 2018 in nominal GDP terms. So we would think if they have not already overtaken the US, which is quite possible, then 2016, 2018, that's probably the latest date. So clearly, from an investor's perspective, you should better look at China gaining some exposure in some way. From a geopolitical perspective, clearly it's gaining an influence quite strongly, and it's probably a good thing that this is happening. China and Russia have been criticized a lot in the West, but then, as we all know, there are different perspectives on this, and the Eastern countries often say that the Western interests are stabilizing the world and not the other way around. So generally, yes, China will be probably number one soon, and we think it's a good thing.
Okay, Joshua, New York, I already saw you nodding your disagreeing. Okay, so go right ahead. What do you want to react to what Martin just said? Go ahead.
Yeah. Yeah, Martin, I mean, I think no one can deny the rapid growth that China's seen in the last few years, but the fact of the matter is that just in nominal GDP terms, the U.S. has more than doubled China now, just around 15 trillion US dollars, with China around 6 trillion US dollars. I don't see that imbalance changing anytime soon. My firm has done some research on productivity, and there are a lot of factors contributing to manufacturing and jobs moving back to the U.S. from China. I think this will all contribute to a slow in the growth of China. And my research, I want to make clear that my research is separate. I'm not here representing my firm, but the research that I've seen and the evidence I've seen all point to, China's growth slowing. And
well, I mean, Joshua, but even at 7%, but even at 7%, that's sterling growth, isn't it? At 7% for an economy that size.
And even if I may jump in again, a lot of people say China's growth is slowing. But
okay, Martin, you want to jump in? Then I want to go to Orlando. Go ahead, Martin. You want to react?
Yeah, just just very briefly. There's so much talk about China supposedly slowing huge time. I mean, if you're just looking at the most recent indicators, the PMI index is strong, 53.1. The service index 53.3. The economy still is really quite strong, and as you say, it's many multiples of what the West is doing, and it's not a theory. I mean, just on the present projected growth, even in the nominal figures, if anything like the figures that we have seen over the last decade is going to continue, then it's a fact. China will overtake the United States in 2018. It's not an opinion. It's just if somebody else is saying in the US, well, China's economy is just about to collapse, that would be one thing that could stop it. But if nothing fundamentally changes, it's a fact that China will be overtaking the United States. So if you think it's Dubai times 1,000, like some hedge fund managers, the property is going to collapse, then that may be different. But otherwise, I'm sorry, That's just not the reality, the way things are going. And on the property, just briefly, our viewpoint is the prices are quite high, but that's one sector, and other sectors are very, very strong in China and beating really, being a great challenge to the Western economies, manufacturing there, which is all going down quite rapidly.
Okay, Ilan, if I can go to you in Orlando, what accounts for the differences here? Because, I mean, I came across a report that said within a decade, it's possible that China's economy be twice the size of the U.S. And then we hear from Joshua, and I'm not going to disagree with him, I'm not an economist on China, but saying it's much smaller. I mean, why the different numbers?
So I actually think that our focus has been misdirected, because looking solely at GDP or purchasing power parity GDP simply means that the overall economy is larger in China. And with 1 billion people, 1 billion plus people, of course, the economy is going to be larger than a country with 300 million people, such as the United States. But I think what we really need to focus on is the ability of China to sustain it for a prolonged period of time and to achieve the quality of life that people in the United States have. If you look at the GDP per capita in the United States, it's significantly higher than that of China and will continue to be so for years to come. Furthermore, if we look at other quality of life indicators such as pollution, political risk, control over corruption, those are all issues that China is still struggling with. And to simply focus on GDP, I think is misdirected.
Well, and Joshua, if I can go to you, I mean, that's not just focusing on GDP. I mean, we're looking at different sectors of the economy in China that are excelling while they're dying in the United States. So you just don't have to look at GDP.
Yeah, I agree with that 100%.
Yeah, that is correct.
I think you don't have to look at GDP.
Let's go to Joshua here. Go ahead,
GDP
Joshua.
per capita. GDP per capita in the U.S. is 10 times greater than GDP per capita in China. And if even my point is that even if you look at GDP overall, I still think China has a long way to go. Now, I'm not denying that China's growing a lot. It is. But it has a long way to go before it can get close to even thinking about passing the U.S.
Okay, what do you think, Martin?
Yeah, 6 years.
If I may add one thing.
Okay, Martin, go ahead, Martin. Go ahead, Martin.
Yeah, well, I would say 6 years isn't that long, you know, even if you are saying, you know, I mean, even if you're saying the property market may slow down, did you actually know, Joshua, that that's the former comptroller of the United States, the guy who's in charge of auditing the books of the US government, David Walker, has been saying earlier this year that the US is now where Greece was 2 years ago in terms of its debt crisis. So even, you know, if you think there's some property slowdown in China, you know, the US debt problem is apparently also just about to explode. That will probably hold the growth back there somewhat too. So again, you know, that this is some out-of-the-world picture that China will overtake the US. I find that quite funny because, again, just on the present numbers, it's just 6 years. It's not really that far in the future.
You know, Ilan, if I go to
So
Ilan,
I didn't even bring up the...
Oh, I'm sorry.
I didn't even bring up the fact of the property situation in China, but that's definitely one factor contributing to a decrease in the rate of growth in China. I think additionally you have to think about the pressures on Chinese currency and the advantage, the cost advantage of labor that China has had is going to be decreasing with the appreciation of the currency and with the increase in demand for wages by Chinese workers. My firm came out with statistics that says, you know, by 2016, Chinese coastal workers may only have a 10 to 15% cost advantage of labor against U.S. workers. And with that kind of advantage, factoring in things like transportation costs and inventory costs, you're almost not seeing any benefit to producing things in China, and it's realistic to assume jobs
if I can go to Ilan,
to
if I can go to Ilan, I mean, that's one of the reasons why the Chinese are going to start investing more in their own domestic economy, because they have domestic consumption. I mean, they may not have the cutting edge for exports in the near future, whatever that means, but they have a huge domestic market that they can work on. That's a huge advantage.
Yeah, I mean, I think there's no question about it, but I think also when we look at the growth numbers, we have to be very careful, because if we grow from 1 to 2, we grow by 100%. If we grow from 100 to 101, we grow by 1%. In both cases, we've added 1 unit of value, but in one case, we've grown 100%, and in the other place, we're growing 1%. So I think we have to take that into account, that China is starting at a much lower place. Now, in terms of China's investment, China is now looking to invest not only in China itself, but really throughout the world, and in Africa and in Latin America and in areas that were traditionally the backyard of the United States. Okay. And they're seeking oil and resources and technologies to continue to fuel the economic growth.
Okay, it's very interesting. You kind of jumped ahead of me. I wanted to do it in the second part of the program. But Martin, I'd like to go to you. I mean, with China with $3 trillion in hard currency reserves, they're turning into the lender of the most favored lender right now because China can loan money without conditionality that the IMF is criticized for.
Yeah, and that's really one of the reasons, as was just mentioned, that China is so successful in other countries, because they're willing to lend, and they don't always force the countries like the IMF to first close the hospitals and schools before the money is flowing, and then under the condition that it just goes back to repay loans from major international banks who have lent money at 12% or 15% or 20% rate, but don't want to take the risks. But that's a bit of a political story. But basically, if you're looking at the effect that China has had in Africa and the development there since they really moved in there quite substantially to develop infrastructure there, in addition to obviously getting the raw materials out, it has had really quite a significant development impact. I don't think anybody can deny this, and that's really also a hope we would think for China, the Asian economies in general, that the exports to the emerging markets and the integration with other emerging markets are growing, because the US, and also as we see in Europe, is going deeper into a debt crisis. But on one other point that Joshua just mentioned, you were saying, well, the GDP per capita in the US is still 10 times higher than China. On the other hand, China is supposed to soon only have a cost advantage of 10 to 15%. Well, that doesn't really seem to add up. Only perhaps if you assume that all the exports go back to the US very far away. But in the future, that's going to be less and less the case as they diversify to go to other emerging markets.
Okay, gentlemen, I'm going to jump in here. We're going to go to a short break, and after that short break, we'll continue our discussion on China is number one. Stay with RT. Okay, Ilan, before we went to the break, you wanted to respond to Martin's rapid-fire comments about the Chinese economy. Go right ahead.
Yeah, I think we were talking about China being able to lend countries some of their foreign reserves. Actually, some of the reason that China is actually able to lend money to other countries is because the U.S. has allowed it to export unrestricted, under most favored nation status, and allow the currency to continue to be low. So China was able to accumulate trillions of dollars of reserves as a result of this loose trade policy. One of the things that we have to realize as we're talking about the Chinese and American economy is that we really cannot decouple these two economies. These two economies are sharing a bed, and the success of one will affect the success of the other.
Well, okay, but could you, if I could say with you, Ilan, I mean, but the ills of the United States and its economy and the Eurozone, that's something that China doesn't want to get itself ensnarled in. Come on, let's, it's the international order has been established by Washington, the Washington Consensus, and Europe, and it's been that way for centuries. The Chinese don't like it, and they want to move away from it, and why not? Go ahead.
Well, in fact, I'm not so sure they want to move away from it. I think the current system in place, the trade system that we have in place, is actually the one that has allowed China to prosper, because it has allowed China to export, sometimes at the expense of Western Europe and American companies who couldn't compete on the salaries, who couldn't compete on the cheap labor, who couldn't compete on the cheap currency, frankly. So the United States and Europe have had policies that allow developing countries to export unrestricted with limited
I mean, Ilan, it sounds very magnanimous. It sounds like a very magnanimous policy. I mean, Martin, if I can go to you, it sounds like from what Ilan says is that China is doing well because the Americans allow them to do well.
Well, it's a tricky question. I mean, to some extent it is true. I would say that the currency has been undervalued. I mean, it's appreciating slowly, but it's still undervalued, which is also why probably they are going to be number one first in purchasing power adjusted terms, and then follow it by the nominal one. And but well, it's tricky to say, how to interpret history here. If the Americans and Europeans just were so generous and of goodwill to all the neighbors to allow this to happen, or what exactly was the reason. reason. I mean, I would just say, well, today, look at today, what is the reality? And there just is that China has become more powerful, whatever exactly the reasons would have been. Maybe they just used the short labor as they did with the so-called rare earths. You know, that's the reason why China is controlling the rare earths, not because they're the only ones who have them, but they were the only ones to be bothered to dig up those toxic minerals and do this hard, you know, poisoning, polluting work. Nobody else wanted to do it, so you can also argue that way. But clearly now China is the major economy, or soon to be. The renminbi is also undervalued, and from an investor's perspective, that means you find good investment opportunities also there. And since we briefly talked about the property and troubles there, I also want to touch on banks, because that's one thing the China Doomies are often saying. The banking system is about to completely collapse because of property. But one thing to bear in mind there, the Chinese banks have the highest reserve requirement ratio in the world, almost. Only Lebanon is still above that. By the way, Lebanon did do pretty well in the 2008 financial crisis for the reason.
Okay.
Absolutely, yeah, but
they have good reason to do that.
Interestingly,
right.
they did.
No, let me go to Joshua here. Joshua, go ahead. I mean, Martin is always encyclopedic on this program. Joshua, do you want to respond to some of the things he had to say? No, because, I mean, one of the things I want to get on this program is that do you think the U.S., how is the U.S. going to settle into second place, okay? I mean, I'm an American, you're an American, we have Ilan also. I mean, we've been brought up as always number one, but in our lifetime, that's going to change. Go ahead.
So, yeah, I think there are a few points here. First, on Martin's point about the Chinese currency undervaluation, I think that's certainly the case. Almost everyone agrees. The order of magnitude is a question, but I think most people would agree on the order of 30 to 40% that, you know, the Chinese renminbi is undervalued, and that's something that actually has changed in the last few years. So I wouldn't say that the U.S. and Europe have just been stagnant on those policies. I mean, since 2005, when China decoupled its currency from a fixed peg to the U.S. dollar, China has been steadily appreciating its currency over 20% in the last few years. So I think this is going to be one factor that, you know, contributes to the decline in China's exports and slows the rate of growth. And to Peter, to your point about how the U.S. will deal, I mean, I think the U.S. is coming to terms and coming to grips with the fact that it is no longer the only superpower in the world, and it'll have to share that power. But I think there are a lot of factors
but Josh,
that
I mean, I'm sure you've been following the Republican campaign. You've been following the Republican campaign. I don't get any sense from the Republican Party that you know, that anyone should be more than number one. That the United States is always going to be that place, particularly in military spending. Ilan, if I can go to you, as one of the interesting things, an analogy I came across in researching this program is that, you know, right now the United States is kind of like Britain after the First World War. The U.S. was the largest economy in the world, but Britain was still the policeman of the world and fought all of these ridiculous wars, spent so much money on defense spending. Wow, it sounds kind of like the United States to me in the present. I mean, the Chinese are watching the United States tear itself to pieces, okay? And the Chinese just keep slowly going up and up. I mean, it's remarkable to watch from a distance.
Yeah. I think the Chinese are going through an industrial revolution of sort in a similar way that the United States has gone through it in the 20th century. Taking over the power of Europe and Europe in the 19th century. So I think you're right that there is a lot of parallels to be drawn here between the declining power of the United States and the declining powers of Europe. But let us remember that even after the decline, European quality of life, GDP per capita, air quality, education level, control over corruption, are still much, much better than most emerging markets. So to say that China only needs the United States to grow is also, I think, an extreme point of view. I believe that China can grow now just simply by growing internally in the same way that the United States grew internally in the 20th century. Okay, Joshua, jump in. Go ahead.
I think there's an important point to make here when making this parallel. If you look at post-World War II economy, the U.S. had about 40% of the manufacturing exports in the world. And so to say that, you know, that the U.S. is in Britain's place today, I mean, the U.S. economy today is relatively strong compared to that, and China only has 20% of world exports on an economy that's largely driven by exports. So I wouldn't say that, you know, the U.S. is headed towards decline in the same way that Europe may have been after World War II. And I think Ilan made a good point that there are a lot of other factors, quality of life and standard of living that that are favorable for developed countries that the U.S. is going to maintain or improve.
Okay, Martin, but I think it's fair to say over the last 30 years, if I go to Martin in Hong Kong, the quality of life for the Chinese has improved immensely. I mean, I think we tend to forget what it was like 30 years ago, 35 years ago. Go ahead, Martin.
That's absolutely right. A lot of people have come out of poverty, but to some extent I do agree. If you go to China, the living space there and compare that to, what kind of house and living standard you can buy in the US. But that's because they have more land. That doesn't mean they have better education. In fact, if you have, educated people, supposedly talking about how their education is much better in America than in Asia, for example, that's a joke, because you're just looking at the PISA International Report. The Asians are always coming out on top. Obviously, the education seems to be considerably better in Asia, and to say that this is not the case, shows maybe that there's something wrong with that education in America. So a lot of Americans see the world still, you're very, very US-centric. And you just mentioned last thing, the Republican Party isn't waking up to this, but one part of the Republican Party is those Ron Paul supporters actually are a lot more modest and realizing that the best days in terms of the debt crisis, for the US, the best days may be very much challenged soon, and that other countries are, becoming stronger and stronger by the day relative to the United States.
Ilan, if I can go back to you in Orlando, I mean, as China grows in other emerging markets, they're going to want to see a change of the way the world is run, at least economically, financially speaking, because they want a greater stake, okay? And we look at these institutions like the World Bank, the IMF. I mean, this is all post-World War II, okay? We're in post-Cold War, okay? We're in the 21st century now. I mean, when are those institutions going to balance out more to represent the majority of the people in the world? Not the Americans, not the Europeans. They're a small minority in the world right now, and their economies are shrinking relative to the BRIC countries, for example.
Yes, I think you're right, but the system that has emerged after World War II is the current system of economic order, political order. So the Chinese really, and the Russians and the Brazilians and other emerging markets really have two choices. Do they want to participate in the current systems and to yield more influence in the systems that we currently have, or do they want to create new systems? Based on what preliminary indications I have, I think the Chinese are going to try to influence the current system and to create some new systems. For example, creating a monetary fund that will be able to bail out developing countries and be able to give foreign aid. But to simply say that we will shove aside all the systems that we've developed in the, since World War II.
If I could just jump in here, Ilan, what about replacing the dollar with a fairer currency unit for the world? I mean, that just benefits the United States at the detriment of everyone else in the world. Everyone. Go ahead.
Yeah, well, you have to remember that immediately after World War II, we did develop an instrument like that. It was called special drawing rights, SDRs. And the reason we don't have SDRs today is because nobody wanted to use them. The dollar has become as good as gold, and central banks have gravitated away from gold and away from
that's
SDR
just a figure of speech.
dollars.
That's a figure of speech, okay? Okay, Joshua, I'm going to give you the last word of the program.
He's
Go ahead,
an
Joshua.
important point.
Go ahead, Joshua. Last word.
Yeah, I think he's making an important point that Bretton Woods taught us that you can't make an artificial currency, and at the end of the day, people trade what they have, and in this economy, people have dollars, people trading dollars, and that means good news for the U.S. in the short term.
Yeah. Okay, well, we'll see if the Chinese can get rid of them one way or another.
And,
Thank you, guys.
by the way,
we've run out of time. Many
Chinese
thanks to my guests today in Orlando, Hong Kong, and in Chicago, and thanks to our viewers for watching us here at RT. See you next time, and remember, crosstalk rules.